Remember those ramen-filled days in your early 20s? We've all been there. Those days when you were scraping by, trying to make ends meet, and ramen noodles were your go-to meal. It was a time of dreams and ambitions, but also a time of financial struggle. You were probably juggling school, work, and a social life, all while trying to figure out how to stretch every dollar. It felt like a rite of passage, a shared experience among young adults everywhere. But amidst the struggle, there was always a glimmer of hope, a dream of something better. I once thought buying a $4 latte was a splurge. It seemed like an indulgence, a small luxury in a world of tight budgets. That latte represented a moment of escape, a brief respite from the daily grind. But looking back, it was also a symbol of the small choices we make every day, choices that can add up over time. It made me realize that managing money isn't just about big decisions, it's about the little ones too. Investing felt like something only rich people did. I was wrong. I used to think that the stock market was a mysterious place reserved for those with deep pockets and insider knowledge. But the truth is, investing is accessible to everyone. It's not about having a lot of money, it's about making informed decisions and taking small steps. The world of investments can be intimidating, but it's also full of opportunities for those willing to learn. Turns out, investing isn't about being rich, it's about being smart with your money. It's about understanding that every little bit counts, and that even small investments can grow over time. It's about setting goals and working towards them, one step at a time. You don't need to be wealthy to start investing, you just need to be willing to take that first step. It's about building wealth, step by step. It's a journey, not a sprint. Each decision you make, each dollar you save or invest, brings you closer to your financial goals. It's about patience and persistence, about staying the course even when the road gets tough. And it's about celebrating the small victories along the way, knowing that each one is a step towards a brighter future. Even with a few bucks, you can start investing. You don't need a fortune to begin, you just need the right mindset and a willingness to learn. There are so many tools and resources available today that make investing more accessible than ever. From apps that let you invest spare change to online platforms that offer educational resources, the barriers to entry have never been lower. It's about taking advantage of these opportunities and starting where you are, with what you have. Trust me, your future self will thank you. The decisions you make today will shape your tomorrow. By starting early and being consistent, you're setting yourself up for success. It's about creating a foundation that will support you in the years to come. And while the journey may have its ups and downs, the rewards are worth it. Your future self will look back and be grateful for the steps you took today. I'm here to tell you that investing isn't some secret club. It's for everyone. It's not reserved for the elite or the financially savvy. It's for anyone who wants to take control of their financial future. It's about breaking down the barriers and making investing accessible to all. Whether you're just starting out or looking to expand your portfolio, there's a place for you in the world of investing. It's about community and support, about learning and growing together. This isn't about getting rich quick. It's about making smart choices and being patient. It's about understanding that true wealth is built over time, through consistent effort and wise decisions. It's about avoiding the pitfalls of get-rich-quick schemes and focusing on sustainable growth. It's about being informed and making decisions that align with your long-term goals. It's a marathon, not a sprint, and the rewards come to those who stay the course. This is about making smart choices today for a brighter tomorrow. It's about taking control of your financial destiny and making decisions that will benefit you in the long run. It's about planning and preparing, about setting goals and working towards them. It's about understanding that the choices you make today will have a lasting impact on your future. And it's about being proactive, taking the steps necessary to secure a better tomorrow. So buckle up, grab your metaphorical piggy bank, and let's dive in. It's time to take control of your financial future and start building the life you want. It's time to embrace the journey and take the first step towards financial independence. So let's get started, together. Time is your best friend, and money too. Think of investing like a snowball rolling downhill. The earlier you start, the bigger it gets. This is the magic of compound interest. Basically, your money makes more money, and then that money makes even more money. It's like a beautiful money-making cycle. Starting in your 20s or 30s gives your investments decades to grow. That's a lot of time for your money to multiply. Don't worry if you can't invest a ton right now. Every little bit helps. Time is on your side, so start small and watch your investments flourish. Investing can seem like a zoo, with all sorts of strange creatures running around. Just like in a zoo, where you have a variety of animals each with their own unique characteristics and behaviors, the world of investing is filled with different types of investments, each with its own set of rules and potential outcomes. It can be overwhelming at first, but don't worry, we're here to guide you through this financial jungle. Don't worry, you don't need to be a zoologist to understand it. Just like you don't need to be an expert to enjoy a day at the zoo, you don't need to be a financial guru to start investing. With a little bit of knowledge and the right guidance, you can navigate this world with confidence. Let's meet the main players: stocks, bonds, and mutual funds. These are the foundational elements of most investment portfolios, and understanding them is key to making informed decisions. Think of them as the lions, tigers, and bears of the investment world. Stocks. Imagine owning a tiny piece of a company like Apple or Google. That's what stocks are. When you buy a stock, you're purchasing a small share of ownership in a company. This means you get to participate in the company's growth and profits. However, it also means you share in the risks if the company doesn't perform well. They can be more volatile but also offer the potential for higher returns. Stocks are known for their potential to provide significant returns over time, but they can also be quite unpredictable. The value of stocks can fluctuate widely in the short term, which is why they are considered a higher risk investment. Bonds. Think of bonds as loans you give to the government or companies. When you buy a bond, you're essentially lending money to the issuer in exchange for periodic interest payments and the return of the bond's face value when it matures. Bonds are generally considered safer than stocks because they provide a fixed income and are less susceptible to market fluctuations. They're generally less risky than stocks and provide a steady stream of income. Bonds are often used by investors who are looking for a more stable and predictable return on their investment. They can be a good option for those who are risk-averse or nearing retirement. Mutual funds. These are like baskets of stocks or bonds. When you invest in a mutual fund, you're pooling your money with other investors to buy a diversified portfolio of assets. This can help spread out risk and provide exposure to a variety of investments without having to pick individual stocks or bonds yourself. They allow you to invest in a diversified portfolio without having to pick individual stocks. Mutual funds are managed by professional fund managers who make investment decisions on behalf of the fund's investors. This can be a great option for those who want to invest but don't have the time or expertise to manage their own portfolio. Remember, each investment has its own personality. Just like the animals in a zoo, each type of investment has its own unique characteristics and behaviors. Some are more aggressive and high risk, while others are more conservative and stable. Understanding these differences is crucial to building a balanced and effective investment strategy. Some are risk takers, while others are more laid back. It's important to know your own risk tolerance and investment goals when choosing where to put your money. Are you looking for high growth potential, or do you prefer steady, reliable returns? Your personal preferences and financial situation will play a big role in determining the right mix of investments for you. The key is to find the right mix that aligns with your goals and risk tolerance. A well-diversified portfolio that includes a mix of stocks, bonds, and mutual funds can help you achieve your financial objectives while managing risk. By understanding the different types of investments and how they work together, you can create a strategy that supports your long-term financial success. Opening an investment account is now easier than ordering pizza online. Seriously, there are tons of online platforms that make the process super simple. You'll need some basic information like your social security number and bank account details. Don't overthink it, just choose a reputable platform and follow the steps. And remember, you don't need a ton of money to get started. Even small, regular contributions can make a big difference over time. Section 5. The magic of compound interest. It's like making money while you sleep. Imagine waking up every morning to find that your money has grown overnight. This isn't a dream, it's the power of compound interest at work. Compound interest is the coolest thing since sliced bread. Just like how sliced bread revolutionized the way we eat, compound interest can revolutionize the way we grow our wealth. Imagine this. You invest $100 today. It might not seem like much, but this small amount is the seed that can grow into a mighty tree of wealth. It earns a 10% return, so you now have $110. This is just the beginning. The magic happens when you let this money sit and grow. But here's the kicker. The next year, you earn 10% on $110, not just your original $100. This means your interest is earning interest, creating a snowball effect. Over time, this snowball effect can turn small investments into a massive pile of cash. The longer you let it roll, the bigger it gets, and the more wealth you accumulate. It's like magic, but with math. The beauty of compound interest lies in its simplicity and power. You don't need to be a financial wizard to benefit from it. The earlier you start, the more time your money has to work its magic. Just like planting a tree, the sooner you start, the bigger it will grow. So, start investing today and let the magic of compound interest work for you. Section 6. Budget and save. It's not as scary as it sounds. Budgeting might sound as fun as watching paint dry, but it's the foundation of healthy financial habits. Don't worry, it doesn't require a spreadsheet and a calculator. Just track your spending for a month to see where your money is going. Once you know where your money is going, you can identify areas to cut back and save more. Even small changes like bringing your lunch to work or skipping that daily latte can free up extra cash for investing. Section 7. Don't put all your eggs in one basket. Diversification is key. Remember the saying, don't put all your eggs in one basket? Well, it applies to investing too. Diversification means spreading your money across different types of investments. Why is this important? Because if one investment takes a hit, you won't lose everything. Diversification helps to manage risk and protect your portfolio from market volatility and uncertainty. Section 8. Keep learning, keep growing. Investing is a journey. Investing is not a one-time thing. It's a lifelong journey of learning and growing. There's always something new to discover and strategies to refine. Don't be afraid to ask questions, read books, and attend seminars. The more you learn, the more confident you'll become in making informed investment decisions. Remember, knowledge is power, especially when it comes to your finances. Section 9. Start today, not tomorrow. Your future self will thank you. The best time to plant a tree was 20 years ago. The second best time is now. The same goes for investing. Don't wait for the perfect moment or until you have a ton of money saved up. Start small, start now. Remember, even small, consistent contributions can grow into a substantial nest egg over time. The most important step is to take action. Your future self will thank you for it. Section 10. Want more money tips? Hit that like and subscribe. Congratulations on taking your first steps towards financial freedom. Investing is one of the best things you can do for yourself, and it's never too late to start. Remember, this is just the beginning of your investing journey. There's a whole world of financial knowledge out there waiting to be explored. Ready to unlock your full financial potential? Hit that like button and subscribe to my channel for more awesome money tips, tricks, and strategies. Let's crush your financial goals together.